Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Thursday, April 16, 2009. The Euro-Yen pair tested the 132 level overnight, but fell to support at 129.35, the lowest the euro has been against the yen this month, as traders search for clues as to how the ECB will proceed. If serious policy disagreements emerge among ECB policymakers, it may undermine the central bank's efforts to bring the economy out of recession. A rally in European stocks to end the European session did help the pair cut down some of its earlier losses. In data from the Eurozone, industrial production declined 2.3% in February, putting the annual rate at a decline of 18.4%, the worst output figures on record. The global recession is curtailing demand for manufacturing products around the world, hurting Eurozone exports, especially those in Germany. Falling output will add one more piece of data to the deliberations of the ECB and whether policymakers will relent and use more unconventional methods to revive the credit markets and boost the economy as the ECB runs out of room to reduce interest rates. The final version of Eurozone consumer prices matched its preliminary estimate. On the year, prices are up just 0.6%, with the core annual rate sliding to 1.5%. Both figures are showing very weak inflation, giving the ECB more leeway to cut rates from 1.25%. On the month, though, prices did increase 0.4% for a second straight month. In the UK, same-store sales fell in March, but the timing of Easter made comparisons versus the same month last year difficult. The BRC Retail Sales Monitor found same-store sales values down 1.2% compared to a year ago. Total sale volumes rose 0.6%. The pound-dollar pair, after hitting a high near 1.5070, stalled and reversed, giving up its gains from yesterday to retest its low near 1.4840. There was an increase in risk aversion overnight as China reported that its economy expanded at its slowest pace in almost a decade. That news from China pressured the Aussie and Kiwi, as Australia and New Zealand send a large portion of their exports to China. The Aussie yen pair fell 200 pips off its intraday high near 72.75, though it did find support above yesterday's low. In the U.S., housing starts plunged 10.8% in March to a seasonally adjusted annual rate of 510,000 from 572,000 in February. It's the second lowest rate since the 1940s and shows that the construction sector continues to suffer as a result of the recession and an excess supply of homes on the market. The data will be a blow to optimism in the sector following a better-than-expected report in February and shows that housing starts have a long way to go before we can say there is a rebound in activity. Building permits, meanwhile, a leading indicator for starts, fell by 9% in March to an annualized rate of 513,000, the lowest on record. New claims for unemployment benefits, however, surprised forecasts, falling sharply by 53,000 to 610,000 in the week ending April 11th. That was a welcome sign for a labor market that has seen claims hovering near 650,000 for the previous 7 weeks. The figure is also the lowest weekly decline since late December. Despite the glimmer of hope that perhaps the recent spate of crippling job losses may be slowing, the total number of people continuing to claim benefits rose to a fresh record high above 6 million. In a final release from the U.S., the Philly Fed Manufacturing Index rose above expectations to post a reading of negative 24.4, as new orders and employment contracted less severely, though the prices that firms were paid for their manufacturing goods continued to slide. The euro-dollar pair retested its low from Monday, bouncing off support at 1.3130 twice today. The pair has formed a downward sloping line of resistance since Monday, and if a line of horizontal support is setting up, we should look for a break to one side or the other rather soon. Again, the euro is being pressured by a lack of cohesion on the part of ECB policymakers and what move they will make next. The dollar-yen pair fell overnight as the risk appetite waned in the face of the Chinese GDP news, but after testing the 98.50 level, the pair recovered most of its losses in New York trading. Stocks in the U.S. were higher as investors built on a late-day rally following mixed trading most of the day. Canadian manufacturing sales increased 2.2% in February, the first increase since July of 2008. Motor vehicle and motor vehicle parts industries in Ontario were behind most of the gains in February, following widespread slowdowns and shutdowns in January. If you take out the auto sector, manufacturing sales edged down 0.2%. The US dollar Canadian dollar pair rallied 140 pips today after testing the 1.1980 area. It stalled at the 1.2150 level, which conformed to the downward sloping channel we have seen the last 8 sessions. Today's move seems to be more a technical play off the 1.20 level, as the risk sentiment was not heavily negative in New York trading. As US stocks made a late rally, the greenback paired some of its gains. Tonight, New Zealand releases data on consumer prices for the first quarter and its monthly food price index, while Australia releases its import prices for the first quarter. Japan, meanwhile, will post data on its services sector and continue with a report on household confidence overnight. Also overnight, Switzerland will release its retail sales and the Eurozone will post its trade balance. Tomorrow, Canada releases its consumer price index and the US will post its preliminary version of April's UMich consumer confidence. And that concludes our broadcast. Thank you for joining us here at CMSFX.com and happy trading.